Ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Kickstart video for April 24th, 2024, where I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and sterling versus US dollar. So let's get started. Start by taking a look at the euro versus US dollar on a 4-hour chart. We saw the euro move higher, the dollar move lower yesterday after weaker than expected data, specifically more, the PMI data. That took the price up toward the 38.2% retracement of this move to the downside. This is the April trading range. The 38.2% retracement came in at 1.0709, and you can see the price move just above that level in trading here today. The early Asian session saw the price extend above that 38.2% retracement, but it could not go very far above that level when we started to rotate back to the downside. The stronger durable goods orders now has the dollar moving a bit higher, taking the price down toward this swing area down through here, which was defined by different swing highs and swing lows through here, which formed this area right through here. We came down toward it right here before moving to the upside. Not really tested it, fell below that level, not last week, but the week before. And last week we traded a little bit above it, but spent most of the week below this swing area. In trading this week, we initially found resistance against the level, moving lower, and then before moving back to moving to the upside and trading yesterday, helped by that data. So we're moving back down toward that swing area between 1.0655 and 1.0675. If we move below it, that would tilt the bias even more to the downside already, with the inability to really extend much above the 38.2% retracement. That's a bit of worrisome for the buyers that this is just a normal or plain vanilla correction in what has been a trendish type move to the downside, at least in the month of April here for the euro versus US dollar. So we have to be cognizant of that. It would take a move above that 38.2% retracement to give the buyers more confidence and have traders looking toward the 100 bar moving average on the 4-hour chart of 1.0728 as the next target. That level also corresponds or is within this area, this swing area, where we had a number of different swing lows and swing highs, forming this floor in particular right through here. We fell below that floor and then based against a level right here and here before moving higher. We came back down to that floor area slash ceiling area right through here before moving to the downside. So this area right here is certainly going to be a problem or a level where we should see sellers at least lean on a look at that level. Let's take a look at the dollar versus yen next, and we did see the crack of the 155 level in pre the durable goods data today. That took the price all the way up to 155.16, but then as fast as it moved to the upside, it moved back to the downside and rotated all the way back down toward our lows for the day, toward the 77 level. That level happened to correspond with these highs back through here as well. So we have a ceiling through here. Here we moved a little bit above it and below it in trading this week. Again, this is the hourly chart, and in trading here today, we have been finding some support against that 77 level, which also happens to be ahead of the 100-hour moving average. That's at 154.67. It would take a move below both this and this level to increase the bearish bias, give the buyers some cause for pause as far as the upside. But until then, the buyers remain more in control in the dollar versus yen. It just is what it is. There were some Japanese officials coming out today saying that it's not 155, it's 160 that perhaps may attract the Bank of Japan. Of course, we have the Bank of Japan interest rate decision coming up on Friday. Will they surprise the market? Will they be a little bit more hawkish after raising rates for the first time in number of years? That will be determined, and will also determine the fate of the dollar versus yen, at least in the short term, for that currency pair. Finally, let's take a look at the sterling versus US dollar, and we'll focus on the hourly chart for this currency pair. And what we see in the this pair was a move to the upside yesterday, again off the PMI data. That took the price toward the 38.2% retracement of this move to the downside here. And like the euro versus US dollar, we found sellers near that level, and we sort of wandered into the close. In early Asian session, the price did move above that 38.2% retracement, like the euro versus US dollar, but then rotated back to the downside toward the 200-hour moving average, toward this swing area through here, which has developed a number of different swing lows in this area through here, which formed a floor. We did break below that level in late trading on Friday before reestablishing level as support, moving above it. then move below it again on Friday, and for the first couple of days of this week, we're trading below it until the PMI data forced the price back to the upside. So we're back. We move back down toward this swing area, also toward the 200-hour moving average, toward the 100-hour moving average. Those levels will all be key in this area right through here. We'll see if that can hold support and push the price back to the upside, or we move back below those moving averages and tilt the bias more to the downside. What we do know on the top side is we do need to get above the 38.2% retracement of the month's trading range and stay above that to prove that this is not just a plain vanilla correction in what has been a more of a trend move to the downside for the sterling versus US dollar this month. If we can get above that level, we look toward this 124.82 level, and then look toward the 50% and the 100 bar moving average on the 4-hour chart as other topside targets. So there you go, a look at the three major currency pairs in the Kickstart video. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.